Hedge Heads, brought to you by American Federal Bank. John, what are we talking about today?
Let's go over some numbers. We're going to go over whether we should be storing this, and if we're selling, should we re-own it? What are the exact numbers? How do I even get involved in buying calls? What does that even mean? What's better, storing it and paying for storage or calls this year? And we'll break all that down. We'll definitely touch on cattle, maybe a little bit of time in beans, but overall, we want to go over that because a lot of guys are calling and asking that question.
It is the end of the year.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we have a summery winter day out there. It's actually cleared some ice off my roof today. It's so beautiful out.
Yeah, we're going to have to get outside and enjoy this because what has it been, minus 20? And that's no joke. That's what it's been here. You don't even go outside. I mean, it's been not go outside weather at all, period.
Right.
Unless you're a cattle guy, of course.
And have to.
And you have to.
Right. I had my truck plugged in, and now my truck's like, I don't know what to do.
Yeah, it is 45-50. We like it like this, stay like this, but it won't. We're in Minnesota.
It won't. We really should be ice fishing today, just sitting on the ice, smoking a cigar. We could have done a remote episode on the ice, John. We got to remember that.
We'll do an ice fishing episode, although I'm sure the wind will be blaring. It'll be impossible, but...
Well, that's when you put the cover over the shelter and then you smoke your cigar and smoke yourself out of there.
And with these kinds of markets, I meant you could easily ice fish. We're back to the old... bad grain markets, I would call them. Well, not bad just because it's going down. It's just, just so directional. It's just either all up or all down, no in-betweens. And now it's down. Everybody's in the dumps again.
Yeah. It's, they're boring, not exciting.
No,
which boring can be good.
But you want to look for these types of markets like now it's quiet. What do I need to get on or what do I want to get on going into spring? And that's the next planning. And like you said, you've been getting some phone calls on year-end stuff. I'm selling my corn or I'm selling my beans. What do I do? Do I cover it on paper? And we'll dive into all that stuff here today. But that's the calls. I think corn's moving a lot easier than it's moved in past years. As a matter of fact, guys are marketing corn more on old crop, and they're marketing new crop a lot faster. And they're even, I've heard whispers of 27 marketing, which I'm not a big fan of at all, or a fan. I think it's just terrible.
I mean, if it was $7.
Yeah, if it made sense. Exactly. So you can feel it. They're anxious to get rid of it, whether they need to raise capital, whether the banker says to. Things are different this year, way different than they've been the last 3 or 4 years. You can feel this pressure that guys are under to, pay for inputs, get rid of this grain, not hold it to losses. It completely feels different. I don't know if you noticed it, but I definitely have. Guys feel very anxious this year. They hopefully sold that bean rally and got rid of some of their beans on that rally. Others are holding and going into the springtime. But now what do you do with this kind of market? For me, when it gets quiet like this, use this to get the stuff that you want on for next year on. Doesn't mean that you just run out and do a bunch of stuff, but you use these quiet periods to it's nice when it's not moving around 5 or 6 in either direction to get some corn calls on or get some, should have been bean puts earlier. I had some bean puts on it. I took them off. I have no idea why I took them off.
On Thursday on the Insider, you made fun of me for missing my window, and I was glad that I kept them because it worked out. Although I got out of most of them today.
Yep.
So on that note, let's talk about some real numbers though, because I am getting calls. It's year end. I have one guy who's definitely selling all his corn. He has to for tax purposes. He's not super excited about getting out, but that's what he's decided to do. So what can he do? Okay. What should he do? And what can he do?
Well,
those are two different things.
It's like which way do you want to look at it? The sale's final and I'm looking at next year and I got to fix, or I got to work on next year, or I want to re-own. And that's a very debatable topic. There's a lot of guys saying once you sell, it's gone. Other guys saying, no, you want to re-own. Now, both are right. There's going to be certain times a year where sales should be final seasonally. And then there's going to be times a year where you have all this upside and maybe you want to reopen it. So what do we have to look forward to? South American weather, which is quiet so far, or it would be good. And then you have U.S. crop growing weather or planting weather, which can move the markets because, you need a lot of corn acres every year. And if it doesn't look like corn's going to get in perfectly or late, it can affect the price, although lately that hasn't been happening. And then you have the entire summer. So for me, I would want to get a peek at least into February. You have the seasonal sharply higher for the next 2 months. One of the best seasonal times a year to be long grains. Doesn't mean it has to go up this year. It's an average.
Right.
This could be a dud year where it brings average down. But you look at the 5, 10, and 15 year, and I posted on Twitter yesterday, the July beans. Today, this week, I should say Thursday, is the day that you will find bottoms in grains. And you look at beans last year, we were making a bottom this week. It was $9.60, I believe. And it looked like the wheels were coming off. And then it just turned around and went to almost $11. It went to $11 in July. So that's what we're dealing with this time of year. You have seasonals favoring it. You have all this weather ahead of you. Clearly, I'm looking for ways to re-own it. What I don't like is the calls and how slow this market looks like it's going to move. That's not always real beneficial to calls, but the calls aren't really expensive. I mean, what do you see?
Yeah, well, and that's what I've been doing is some research on what are the call options out there to re-own it, because that's, in this case, that's what he would like to do.
Yep.
Is re-own it. He feels that that's the direction to go for now, and probably not more than a couple months this year, but to re-own it in some way, and probably not the whole thing either, right? Not everything he sold, but maybe it's buying 1 call or 3 calls or something like that. So we've been looking at both the March and the September calls, and man, the prices are not bad.
No, they're really affordable. And by the way, this is a very debatable topic. I don't doubt you're going to have people saying that once you make a sale, that's it. Don't monkey around in the markets. Don't do this. Don't do that. And you're gonna get a lot of confusing advice on what to do. You're gonna be the broker only wants you to do stuff so he gets more commissions. Once your sale, that should be your final sale, and that's gone. That's the way the bankers want it, and it's. I think it's a gray area. I think that it'd be silly just to completely dismiss ever re-owning anything. But then there was one firm a few years ago that was saying re-own everything for the last 3 years that you can afford. And that didn't turn out, by the way. And then they did it again and it didn't turn out again. But that's the one extreme where that's too much. And the other extreme is finding a balance. Let's say you have 50,000 bushels, maybe re-own 30, maybe 40 or half, or do something. But it's a personal choice. It's like take these option prices, look at what I've talked about, the seasonals favoring the up, all the weather windows, and does it seem like it's a smart idea to invest 11 cents, through the March time period, or 16 cents through the May time period? Does it make sense to give up a little more of my bottom line to reopen this upside? Are the calls affordable? These are all things that you should be asking, or asking somebody that knows. Like, would it make sense that we are at a fairly high price? Seasonals don't favor it, and options are really expensive. No, it really doesn't favor it in that way. But when you look at it in the context that we're in, seasonals favorite. Fundamentals, I would say, are mixed. Outstanding demand, but a large supply. And then beans are even more confusing. So you have that, and then so you got to look at the numbers and see what makes sense in what time frames. That's where these conversations that Ryan and I have with clients come from. Like, does this make sense? Do I want to do this? And then what time period do I want to do it in? One guy will choose futures, and he'll be totally comfortable with that. Like, he'll have no problem that hey, I think we've had a big enough dip here. I had sold my corn maybe at 460, and now I want to re-own it 30 cents lower. And that's his journey. That's the way he wants to do it. He might not have bins. I have a couple clients that don't have a lot of bins, don't want bins, and they'd just rather re-own it on paper, so they're looking for spots to re-own it. And then you have the guys that want limited risk. Hey, I do want the upside open, but I don't want margin calls, and I want to see what happens. And then they'll go the option route. You got to go with what works for you. Another aggressive guy might sell a put, buy a call. One guy might buy a futures, buy a put. There's a million different combinations depending on what you want, and it's just a matter of learning about the markets and what's best for a guy. Like for beans right now, it could go either direction. I know that doesn't help, but you're at 1060, and it's like the gap's finally filled. Did you hear? The gap's filled, by the way.
the gap's filled.
Good. Can we quit talking about the gap, everybody, please? No, it's annoying because everybody gets so fixated on this stuff. It was likely that it was going to fill, always.
The gap's filled, it's going to the moon. You'd want to buy, right? Isn't that the way it works?
Yeah.
As soon as the gap fills, it's going to rocket out of there.
It's a guarantee once the gap's filled. No, it was an important thing. People were talking about it, and now it's filled. But it could go either direction. So that would be a perfect example. If you were looking to buy a dip in beans, maybe you're looking at buying a put and
I should stress I was being sarcastic about it rocketing out of there.
No,
exactly. That's not a recommendation.
No.
I just thought of how I said that. So
it's and I think people kind of know that we're kidding around. Right. But it's
I do want to be clear. That's all.
It's a market that could go either direction. Where
right.
I probably wouldn't buy a put and buy corn futures, to protect it. I like a synthetic long. I don't think that you really need that kind of downside coverage in corn. Never say never. Where beans could easily fall another 50 cents, very easily, very unpredictable. So kind of just know your markets. But anyway, it's the season where we're deciding what we're going to do. Are we going to re-own, not re-own? Are we already looking forward to 26 strategies? Which we are. This is a dip that I've been looking forward to, and I'm using to start doing some 26 stuff. And you give us a call, and then we'll go over exactly what we're looking at on that side of stuff. But it's a good time of year. People kind of dismiss it because of the holidays, but this usually leads into quite a bit of action. And believe it or not, there's been quite a few going into Christmases with a lot of opportunities, kind of when everybody's sleeping. I don't remember how it was last year. I think it was going up pretty good last year. It wasn't quiet, I don't believe.
It was.
Oh, that's where I lost the bet.
That's where you lost the bet, because I figured there'd be some little profit taking at the end of the year, which I would expect, or sales, depending on year-end sales and how that works, right? Let's talk. The other decision that guys are making out there is if you are storing at the elevator, you're paying storage.
Yep.
What are your options? How does that look this year? Because I know, like, if you're just talking out to March, it's close to a wash. But if you're going longer, it's not. Yep. How does that work? How do you decide? What do you recommend to guys who are paying storage? What are you? Let's talk some real numbers for that.
Okay, so March only has 62 months, 66 days, a little over 2 months. What if you choose a call over storing it at the elevator? Just know you're paying the exact same thing, and then we'll go over the benefits one over the other.
So what do you mean exact same thing?
Let's say, so it's about 11 cents for a 435 call. That's right at the money. And it's going to cost you right around 10 cents for those two months. With 66 days is right around 11 cents. But you have to make decisions at the elevator. How long you're going to do that, and there's more that goes with that than just owning a call. The market can go down when it's in the elevator. Now, if you buy a call for 11 cents and it goes down more than 11 cents, you can't lose more than 11 cents. In the elevator, you can lose
30 cents
down to zero, down to minus 50, because that's where oil went that one time.
Right.
No, but theoretically, you can lose anything. Like if it goes to 375, you're on the hook for that at 375. Where if you buy just the call, you only could lose 11 cents, worst case scenario. Odds are you wouldn't even lose that. It would have some worth because of the time value. So that's the one huge benefit. What are some benefits to keep it in the elevator? Well, basis appreciation, basis getting better. Maybe if you have a hard time hanging on to your money, if you sell it, it's like a piggy bank for you. And it's silly as that sounds, I think some guys use that knowing full well if it was in their hands, they'd be flying to Vegas or doing whatever they got to do to get rid of that money really fast. It kind of forces you to save money and plan better maybe, and instead of just getting all that money in your hand. But what are the benefits to selling it? You get the money in your hand. So it works both ways. You buy your inputs and do what you need to do with that money, put it to work, and you have the same amount of $5,000 for 11 cents, but you have all this cash in your hand. Does that sound too good to be true? No, not really. I mean, you're giving up 11 cents, the bottom line, you're doing it, but my point is you're doing that anyway, storing it.
Right.
And you want to compare the numbers like you're saying. Like the March time frame, it's definitely very even, and there's not a lot of time left. But if you look out to May, it's at 4.45, and it's right around 16 cents for the call at the money. And you're going to be paying 20 cents there. So you can already see a 4-cent savings just owning the call for the May time period. So that's the way I see it. And why I feel a lot of guys don't do it is 2 reasons. Out of convenience. It's there. It got hauled there. It's being stored there. That's what I've always done. You know what I mean? Path of least resistance. And then another one would be that they just simply don't understand how this all works, and they don't have anybody kind of trustworthy to help them with it, or they feel like they should know it and they just don't want to ask because it looks silly. But I think it's number one more than anything else. This is the way my dad did it, or this is the way my uncle did it, and he was successful, and this is the way I'm going to do it. But again, if you go back to what we said, to me, calls when they're cheaper have a huge advantage, especially in a bearish year, because you're only limited to what you pay for the call. So like I say, if you buy a May call for 16 cents and sell your corn, you're only on the hook for 16 cents no matter what happens. Where the corn in storage is whatever goes down is what you're going to lose. Not 16 cents. It can fall much more than that, and has over the last couple of years, especially if you stored it in July. It's been, you paid all that time, paid all that money, and you lost a bunch of money storing corn. On the raw price. So that's where it's a good to kick the tires and see if it makes sense. Know where those numbers are, know if it makes sense. I've really been pushing this September time period. I just think because everything's so cheap, and the way the carries are right now, I like that September time period. It gives you an awful lot of weather. I think they're going to hold their value very well. But March or May could go up significantly more than September. So they always say you should go exactly with what if it's old crop, you should go with the month and the time period that your corn was going to be stored at. So if you go with September, you run the risk that March and May could run well past September. I don't see that happening. It definitely was above quite a bit last year, so never say never. It could happen. But I still am pushing that September time period. What do you like? March, May, September? What's your favorite?
I still prefer the July. I know why you don't. I get it. But I prefer the July calls. I have been pricing both, though. So with September close today at 4.46, and the 4.50 call is 27 cents.
Yep.
To me, for 248 days, it's worth looking at.
Yeah.
July closed at 4.50, and the 4.50 call is 23 cents.
Yeah.
I mean, that's you gotta look at it. And what are you gonna spend in storage for 192 days?
Yeah.
I mean,
and that's why I like
gotta look, at least run the numbers and see if it makes sense.
Yeah, and as a matter of fact, I need to look at the options more. This looks wide open to opportunity going into the summer. Like the world had perfect weather last year, more or less, for all grains. The market's pricing it that way again this year. So far, that's the way it's going in South America. It is, again, perfect weather. But the odds that this stays perfect from now all the way into July is not very high. So is there opportunity and options for this time of year with what's going on? We have a large pullback. The implied volatility is already non-existent and falling every day, meaning the price of the options. So yes, this does appear to be a year where one should start pricing stuff and looking at stuff. But on the other side, I'm looking at puts too. When beans were going higher, I started following those November 26 $10 puts, and then they got down to 14 cents. I've had very good luck in those over the years. It doesn't need to go to $10. It's just that big fall in the summer. So I'm starting to track the cheap puts that I like to buy also on the other side of it. I know that sounds confusing, but it's still you'll find your lows in those puts the cheapest that they get when the markets run up. So I'm planning for that. I'm not going to buy them now, but I'm looking at both sides. I definitely favor the call side over the put side.
Should have bought them in October. He's sitting pretty right now.
Yeah, and that's the thing. I had some on, and then I take them off. I just started putting on. I think it was 1090 Januaries, and then I thought, maybe it isn't going to go. I probably read too much Twitter because the problem with online is if you read enough, you're going to convince yourself of anything. I'm sure it was the extra bullish guys were tweeting out extra bullish stuff. And it's kind of formed into two groups. You have the perma bears and the perma bulls. They've been fighting back and forth. They've both been right in different time frames. But kind of just typical markets. I like to use this type of, down move for getting stuff on. Other guys, get mad and kick dirt and wish it would go higher. But usually this is the opportunities, especially when stuff's cheap, to get stuff on for spring into summer. And that's exactly what I'm going to use this time period for.
Yeah, that makes sense. I think running the numbers, especially right now, just makes a ton of sense. And that's what these boring markets can be a good time to do. But consider your option. It's not like you have to make sales now.
No.
But if you want to make sales, or especially if you're carrying a line right now or a note, there's actually options to keep that upside open and not be paying interest as well.
Yeah, that's another big thing. Like you say, you tie up all this equity and you're paying a lot higher interest. Is owning calls just better than paying the interest? We didn't even factor that in. We factored the expense of the elevator. We didn't even factor in the expense on the loan side of stuff when you can pay that down by selling the corn and owning calls. So there's more benefits to that in my mind once you understand how it works than sit there storing and hoping. Of course, the elevator guys will tell you different, but that's how they make their money, by storing it for you. And then, like I say, the convenience factor. And there's logistics. It's not like you could just sell all your corn off the combine that you wanted and then just sit back in your easy chair and let all these other suckers store it. You can't. You just physically, it can't be done, or economically, it doesn't make sense, and you're busy in that time period.
That's what I used to do in Farmville, though.
So Theta Farmer was just reminding that storage is just basically a logistics thing to get harvest done. And I don't disagree with them, but it's also a crutch that guys lean on an awful long time. They don't want to make a decision on it. It's just easier to put it away and not think about it. All the expenses are built in, so it doesn't cost. You don't have to front 11 cents for this call. You just have that expense built in, and it's just convenience is really what stops guys from exploring other avenues. And I would encourage guys to start looking and pricing stuff. And again, it moves so much and things change so much. It's not like you can get this blueprint or template and just apply it every year. It's just every year is different. But then that's why guys like Ryan and I are around. You can simply ask us. That's what our job is. We should know these numbers when you call, and then we can go over them. And if we don't have them, we'll get them and go over them and then call you back.
Absolutely.
So that's it in a nutshell.
What do you got on cattle, John?
Cattle. Okay, so the feeders, they'll pay anything in the sale barns. We've seen this movie already once. Doesn't matter what it seems it is. They're going to pay. Here's where I sit on cattle. This administration's repeatedly, including this week, which they say weekly, intends to get the beef price down. Now, that might mean a lot of different things. Generally, when the beef price is down, the cash price is going to come down too. But others don't believe that that's the case. I believe the first shipments from Argentina came. There's going to be many more. There's going to be from Brazil. This stuff was already coming in, but they're going to open up new avenues. Australia was on the table. It takes a little while for these channels to get open, but they fully intend to do that. And I would take them at their word. And to me, this looks like and areas I would look at the numbers to look at hedging. Now on the downside, the numbers are bad. It's extremely expensive. So what you have is a exceedingly risky cattle market here. I'm favoring the downside over the long side, but not necessarily short term. Excuse me. I just think we're building into a major top. This looks a lot like 2015 to me. And if you don't know what I'm talking about, go look at the 2015 chart. When it fell, it was a different time period as far as the months go. And I don't remember. I think it was more in the summer, late summer. But they're very comparable so far. Go look at the 2015 chart and then adjust your hedges accordingly, because that's what I think it's going to do. Something very similar to that. That's how the old bull died. But what happened that year is the feeder guys really got hurt. Or not every one of them. Feeder guys really got hurt that year because they overpaid, and then you had a much lower market. Sure feels like that's happening again, but you can't. The fundamentals are strong, but I do think that you have an administration that's working on getting beef prices down. Absolutely be looking at hedges at these levels.
Makes sense. I mean, you want to talk gaps, though? Look at these charts. There's gaps all over. I mean, if we're going to fill all the gaps, we got a long way to go both directions.
Yeah, they haven't talked too many cattle gaps, but yeah, there's been some news there, that's for sure. But it's an interesting market. It got overdone. Now we bounced. Feeders are really bouncing. Still everything's a long ways from the top. Ryan's got the chart up. We're nowhere near those old highs. I mean, it's got a ways to go to get up there. Is it possible to get up to new highs and beyond? Absolutely it is. But for what I said earlier, that's why I think that this is a hedging opportunity that should be looked at. I favor the puts is where I'm at. I'd rather have that upside open and know what my downside risk is. And I think you just keep it simple.
So if you're looking at what months are you looking at, both for feeder and for fats?
Some of the clients are May, whenever you're selling your cattle, sometimes it's best if it's a long period of time to divide it into two parts. But May, August, and September are going to be the big ones that guys are looking at right now. January was, so guys had January hedges on, and now anything new has gone into March. But I still like that May and that August time period a little bit better. But I don't like the board. I don't like how we're underpriced in the front. I don't like how we're underpriced in the summer. And the board is not the most hedgeable looking thing in the world. I mean, it's not a very good setup. What you have is a substantial amount of risk in the cattle market right now, which I'm sure guys are aware of, but that's really what you have. The board's just not set up very good for hedging right now. And it is what it is. I mean, what can you do about it? It'll change. Give it a month and it'll be completely different. But that's kind of where I'm at. Hands are tied, but you have a lot of risk here.
Are you looking at anything in the fats, live cattle at all?
Yeah, I want to get on the spec side. I want to get puts on eventually.
What months are you looking at there?
Oh, that's always the $1 million question. You always want to make sure you have enough time. So I favor longer term, where other guys, if you're right in the short term, you make more money, obviously, because it's cheaper, and if it falls in that time period. But you look at the seasonals. February is a seasonal high. So June is probably the month I'm looking at, maybe April. But so far I'm just watching is what I'm doing. I'm not getting in, but I want to have something on the spec side, because you saw what happens when cattle tips over, it really works really good in options. And it tends to go too far. But I don't know the timing on it. I guess I'll have to. I'm going to go off feel. I'm just going to go off pure feel.
I mean, if we knew the timing, John, we wouldn't be talking to anyone else.
Look at the last high. They said they're going to get cattle prices down, and then it went down that day, and then it bounced the next day. There was actually plenty of time to get stuff on up there when they told you exactly what they're going to do, and that's what I led with. They told us what they're going to do with the beef prices. They're going to get them down. I would take the government at their word. Now, I'm not in favor of that at all. The government get involved. Don't get me confused with like being in favor of that. I'm not at all. What I'm saying is that is their plan, and that's what they intend to do. I would take them at their word, and then we're going to be sitting here a number of episodes later and say, hey, they did tell us they were going to do that. Why didn't we buy puts? But it's never easy to time. I just, I don't know. I also like to do this in grains. Back to grains really quick. I was going to talk about it, I forgot. Is one thing I like to do in front of a summer And it doesn't pay off too often, but when it does, it can is buy cheap calls, like way out of the money, like the $6 corn stuff. But you know what I don't like this year is how all these cheap calls are not cheap. Like it's the implied volatility is cheap and it's cheap up front, but as you go more deferred, it doesn't cheapen up a lot. No, I like the penny and a half, 2 pennies. Those can make for good hedges too, where you got a hot and dry summer. You don't know whether you're going to sell, but then all of a sudden these 580 calls are in play. Then you can sell everything and still have your upside wide open. Same sort of concept as courage calls, but in a wild market they can really pay money, because if it goes up to $7, then you have a $1.20 profit on that after you made your 580 sales. Like you can really make some money. Or if you don't have those calls on, you could not make the 580 sales, and then it could fall right back to, $4. So, those little things can make a big difference. What I don't like is I don't like how expensive they are this year. I have been tracking them. I'm hoping that they're going to drop going into summer. But I think we have till spring to even worry about that. I don't think anything's going anywhere unless South America, something happens there. I think we have time to get in anything that we want to get in. That's what I think.
Makes sense. All right, John, anything else today?
No, I think we went over kind of what guys are talking about right now. I don't like the overall feel. This feels way different than years prior. Feels like there's a lot of pressure on guys to make the right decisions. It feels like money's tight. Like you can just feel like the inputs are brought up constantly. We hopefully in the days ahead the inputs come down. We come up in prices and we can find some equilibrium where there's some opportunity, but boy, you can just feel that tension. It just has got a real different feel this year than I've experienced the last 3-4 years. Also, like I say, the marketing side of stuff, guys are really willing to market really quick now, where in the past they hadn't been. So we'll find out. But my overall hunch is there's going to be something that we don't know right now that's going to make these very different markets. Whether it's, gold and silver and inflation and oil turns around and rips, the dollar falling, whether it just feels like it's been quiet for long enough that you do have something. That's just a hunch I have, that everybody's getting so complacent in all this stuff. And like I say, all these early sales, this stuff can't go up. It's never going up next year. It almost feels like it's come to a point where it is going to do something that's going to surprise people. Because the last 3 or 4 years, everybody was so sure it was going to go up or it can't fall. And, slowly everybody's just gotten ground down to this is never going to go up again. And that's usually when it changes.
I have been reading some biofuel talk, some E50.
Yeah, it could be that.
Some of that around some of those things could make a massive difference.
Yeah, if the polls go low enough, I'm sure they're going to get right on that.
Right. Yeah, it's a decision between oil money or the people.
Yeah, you can just feel this energy. It just feels like everyone's given up on these markets, and usually I'm the doom and gloomer, but lately I haven't felt like that at all. It just feels like something.
I don't think it's usually you're the doom and gloomer.
I'm following the fundamentals.
You're the contrarian.
Yeah, I'm following the fundamentals.
So you're the doom and gloomer when everyone's bullish, and you're bullish when everyone's doom and glooming.
That might be true.
That's what I see. We've only been doing this together for 8 years now, John.
Yeah, you have to be that way in commodities, though. Actually, it's beneficial, but it doesn't always work great in life. People start calling you contrarian all the time. But you got to take the other side of it. I could be totally wrong. I'll never bring up the episode again. But if I am right, I'll bring up this episode all the time.
Love it. All right. Why don't you leave your number?
218-731-1578.
Thanks, John.